Good morning, everyone. It is Wednesday, June 4th, and I'm Jenny Ray LaRue, co-host of Market Outsiders. I'm here with my colleague Namaan. Good morning, Namaan. How are you today?
Good morning. It is a stormy morning here in Texas. I'm not used to seeing rain in June, so we're very happy down here.
In California, I'm not used to seeing rain in June, July, August, or September, Namaan. We're kind of headed right into a super long dry stretch. Well, I'm really excited to jump in today. I want to talk a little bit about Dollar General. And I don't know if you saw the earnings report, but I kind of pulled up two different articles about it that I thought were kind of interesting. Really, I feel like this whole week is basically just a lead up to the jobs report. I think we should call it Jobs Day on Friday. We had Home Depot Day last month. The Jobs Day to me is like one of the big days every month. We've talked about this a few times about when we were trying to tease out what's happening in the economy. Understanding what happens in the job market is probably the biggest lagging indicator. It's only retrospective, so it's not a great leading indicator, but it is a really good sense of whether what all the pundits said for an entire month ended up being true or not. And so Friday is that day for us, but I think Dollar General has some really interesting insights from consumer behavior, and also some just other like tactical growth insights. I think you could make a whole macroeconomic story out of something that is actually also very much a tactical decision for the company. I think it's important to separate the two. Do you want me to just dive into that, or do you have anything else that you want to launch into this morning?
Well, let's dive in. I haven't seen Dollar General's earnings report, so you'll get my unfiltered in the moment reaction. So I'm excited for that. And then I will just say it's kind of technically jobs day today because the ADP unemployment data came out this morning. And so
Oh,
it's
did it
not
already
the,
come out this morning? See,
yep,
I've
it
been up
dropped
for
this
so
morning.
long that I didn't even see it launch. Okay, so you
So
want to lay it
let's
on us
jump
really
into,
quickly?
yeah. Let me just give you the preview and then we can dive into Dollar General. So,
Great.
just for people who don't know, ADP is a private payment processor and they are the largest payment processor in the country. About a fifth of the private businesses in the country run payroll through them. And so they are sitting on this tranche of data that nobody else has access to. And they do a great job of publicizing their business by releasing this their own unemployment report every single month. And so what they are saying is that private employers last month added 37,000 jobs. And this was lower than estimates of $110,000. So, or 110,000 jobs. So, what I'm seeing this morning is a negative reaction. Stock futures turned negative after the report dropped, just because this was so far below consensus. Even the president came out on Truth Social. I don't know if you call like, do you say he truthed? What do you say? Anyways, whatever you say, he posted on Truth Social that he thinks that the Fed should drop interest rates, and it was in response to this report that was published this morning. And so, really, my take is that this is mixed. It's lower than consensus, and by quite a bit. Not great, but overall, private employers are still adding jobs. That's a positive. And number two, ADP sits on a large amount of data, but it's still a representative sample, right? And so you don't get a full picture from any one report. When the government releases numbers on Friday, I don't know, Jenny Ray, if a lot of folks know this, the way that they calculate unemployment is they literally survey 60,000 households. That ends up being 110,000 people in a sample size for a country of 350 million. And so even the official government data isn't full data when you piece together what ADP is saying with what the Bureau of Labor Statistics is saying, with what other sources are saying, that's when you start to get a fuller picture of the labor market. And so this is one data point, and I'm excited to juxtapose it against what we see on Friday.
How is it possible that the US government does not have access to better data than that? Like surveying 60,000 households is incredibly expensive, first of all. I mean, it's hard to get 10 people to respond to a survey. So the number of people you actually have to survey in order to get is that 60,000 responses or a survey of 60,000? Because I could imagine that the response rate to that would be like 2,000 people who are basically
The
dictating the market and the insights about the larger
my
economy. Any insight on the
my
actual methodology there?
my understanding is that the sample size is 60,000, and so they must be, reaching out to an order of magnitude higher than that. And my understanding is that the survey is still conducted via landline. So if you're listening to this and you work for the Bureau of Labor Statistics or you know better, let us know if something's different. But
Do you have a
when
landline, Amon?
I don't. And so when you survey people through landline, you are picking who you're going to talk to, and it's
You're developing
that
bias immediately.
immediately, right? Like that sample size like all automatically skews older. And then there are other demographic factors at play as well. This is the same problem with political polling and why political polls are often wrong is because we have outdated methodology for how people communicate today. And so it's going to be interesting to see what the government data says on Friday. And I think you'll find the truth somewhere in the middle between what the government says on Friday and what ADP says today.
Well, what's interesting about I'm just imagining like, if ADP is able to use those numbers, most people are submitting Social Security payments or payments into one of the entitlement programs as a part of payroll. And not everybody does it quarterly because some people are doing it on a 1099. They're working on a 1099 basis. So I'm curious, when you think about unemployment, how that factors in. But I could just
Yeah.
imagine that the US government would actually probably have more comprehensive data than somebody like ADP actually would if they were willing to both collect it and mine it
I,
itself.
so what the U.S. government I'm thinking also tallies is 1099 contractors and then public employees. So ADP doesn't process payroll for any public
Correct.
entities, right? And your 1099s are using QuickBooks, right, or other kinds of software to invoice their clients. And so if you are a W-2 employee at a private company, there's a good chance that ADP is like on the back end processing your paycheck. But and while that is a significant part of the economy, it's not the entire economy. And so I do take this seriously. But again, I really like to try and piece the story together from multiple sources.
I love it. Well, also, I mean, adding jobs is still a story, right? I think that like adding jobs lower than consensus is like those consensus numbers are methodologically challenging. I'll just say it from somebody who ran them for a while, right? Like you're kind of like, I feel like I kind of want to head in one direction, and you kind of make the numbers work toward it. And your job is to be somewhere closer to the numbers than the consensus. What that means is that it's like picking numbers with your family. You watch somebody pick a seven. If you think it's lower than a seven, you don't pick a one, you pick a six. And so consensus often is biased toward a artificial median. And you end up with these situations where nobody's really got their own solid methodology to project. And then you're always going to miss consensus. Like you're always going to be under it or you're always going to be over it. So I think the real number that matters here is whether the jobs report is up or the jobs report is down, right? Are we adding jobs or are we losing jobs? That's really when you start to see an indication of what the numbers are, not versus consensus, because
Hmm.
consensus is such an artificial median.
I agree. No one ever gets fired for being in line with consensus, right? That's
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 right.
true for
Oh, everybody
unemployment
else said
projections.
it. Our methodology led there. What
Yeah.
a surprise that happened in the
That
market.
that's true for year-end price targets if you're thinking about the S&P, right? Like almost all estimates in any field are clustered. And then you have a couple of outliers, right? Those are folks who are willing to put their neck on the line and say, hey, you know what? Like I could lose my job over this, but if I'm right, I'm right. And so I agree with you. And again, projections are just here's what we think will happen. The 37,000 number is what actually happened. And so uh, I think markets should move more based on what actually happened, not based on what, a group of economists, as smart as they are and as complex as their models are, what they're saying might happen. So again, it's going to be interesting to see what the US government data says on Friday. Let's dive
I
into Dollar
agree.
General.
I think so too, Naman. I wanted to just kind of dovetail that with what's happening at Dollar General. What's interesting was that there was a lot of sentiment, but not necessarily a lot of real change. And so, what they said, what was expected to happen. Let's talk about that first. The consensus was Dollar General is going to get squeezed because of tariffs. So, walking into their earnings call, the expectation was no, this is going to be problematic for Dollar General because they already have very limited margins on the products that they have, albeit slightly higher than some other traditional grocers and other players in the space. So I thought this was kind of interesting, right? Their net sales increased 5.3%. I think the second line here to me is the highlight that no one is talking about. They opened 156 new stores in a quarter. I mean, that is an astonishing amount of growth. And there are very few organizations that can keep up with that kind of pace. So leaning into these new store openings, you're going to see a natural increase in net sales. You're also, what they saw was that same store sales increased 2.3%. But then if we kind of slide down here, right, we see that there was growth in same-store sales increased by 2.4%, right? So a lot of the growth was driven by some of these new store openings. And I think that's a really important point. But same-store sales did still increase by 2.4%. And then I kind of talked about this consumable and non-consumable product categories, which is also important because it means that it was across a diverse amount of categories, not just groceries, but the other stuff that you stick on your picnic table for the 4th of July. And for me, a lot of those pieces that are inside this picture really speak to a strong operator. But the story that a lot of people are extrapolating from this, which is true, just not the whole truth, is that Dollar General was favored in economic uncertainty. And so what they said that they saw was a wealthier customer coming into the Dollar General store, buying more than they had in the past because they were shifting share from other places. And they didn't yet see, of course, many cost constraints because these goods that were sold at Dollar General inside the first quarter, the tariffs hadn't hit it all yet. And so I think it's really important to note that they traded up. This was looked at as favorable. Dollar General is a very solid operator, but there were two pieces of the picture. They were growing stores and they were growing in a sales per store way. And you can't look at the whole picture and say, wow, it was only macroeconomic, because a lot of this was operational.
So 3 points there, January, just to add on to what you were saying. And again, I'm looking at this for the first time, so this is my initial reaction. So first, I think the numbers back up the story about the wealthier consumer trading down.
Mhm.
Because if your customer traffic is decreasing, yet your same store sales are increasing, that tells me that your basket size is increasing. You are selling more to each customer who's walking through the door, right? And what I extrapolate from that is that the customer who's walking through the door has a little bit more income to
And look
spend
at this
or
one, right? Reduce merchandise
yeah.
inventories by 5%, right? So you're
Mhm.
you're seeing more merchandise fly, more turns. I think that is directionally in line
Mhm.
with that. In fact, there may have even been something else. Customer traffic slightly decreased,
Right. Right.
which
So
means
if
that by nature you have to increase the basket size.
exactly, that's the only driver now. And so
Mhm.
that backs up to me the story that okay, you've got wealthier people walking into Dollar General. So that was point number one. Point number two, if you scroll back up to the top, and you alluded to this, but when I hear, hey, we opened yeah,
The
right
store
there.
openings, yeah.
Yeah,
Hmm.
when I hear, okay, we opened 156 new stores, like my first reaction mentally, right, before I even kept reading further, was okay, is this net sales increase due to new store openings? Only because my thought was, are you cannibalizing your existing stores? And so when I look at the next line and I'm like, oh, okay, same store sales are still increasing, that tells me that they're being strategic with where they're opening these new stores. And these new stores aren't cannibalizing, or they're not cannibalizing enough the existing stores to um, right, reduce the revenue per store that's being generated. So again, that points to a savvy operator. Sometimes you see companies that are just growth at all costs, and they're like, more locations are better than less locations. That seems to be their operating mantra. And then what ends up happening is same store sales decrease because you have a store 2 miles away that's cannibalizing from the existing store. And now all of a sudden, your SG&A is increasing, your fixed costs are increasing, and kind of your rate of growth isn't keeping up. So, as a potential investor, I don't own the stock, but as a potential investor and just as someone who likes business and follows business, I like seeing that both of these metrics are up. It would be a red flag for me if new store openings were up, but same store sales were down.
I would say that to me, one of the most interesting pieces that no one talked about, though, is this negative point here, right? Customer traffic slightly decreased by 0.3%, which points again to the fact that basket sizes were the issue. I'm not sure this holds up with the wealthier customers traded down message, because you would expect to see customer traffic increase if you were seeing new people in store, along with some of potentially your more captive customers. This is the data that I would dig into. If I really wanted to understand Dollar General, I'd really want to look at who the customers were, what the customer mix was. I'd want to understand what was in the basket that they were buying. Was this simply driven by for example, customers preloading in their carts, where they just buying more in advance, knowing that they're currently employed and knowing that prices are currently what they are, because you're hearing in the news everywhere prices will go up, prices will go up. Like this could literally just be same customers hoarding, as opposed to with the same issue that we saw with the tariff pull forwards, right? So you may have the same exact issue inside the store. And so because of that, I think that that's a potential concern. And I would look for that really specifically.
I don't think so. So counterpoint, it's
Yep, sure.
possible. I don't think so because I think Dollar General's core consumer doesn't have the disposable income to stock up, right? They're not Costco. So I think you are seeing like their core consumer lives paycheck to paycheck and they come in after every payday, like for that week or that 2 weeks worth of goods. So this to me actually does back up the fact that wealthier consumers are coming in because those are the folks who can stock up. So you're going to
So
see
who
less.
left though? This is what I'm
So you're
asking, right?
so
Because
you're going to see
if
less
they're
repeat
coming in,
visits.
who's gone from the
So
store?
you're going to see less repeat visits from those folks, which would make sense to me, right? That like if you are if you are adding like a wealthier consumer, like they're going to visit less. Who left? It's possible that folks who lost their jobs left. It's possible that you are seeing like again, a lot of Dollar Generals are, I see them located in rural areas. It's possible that this is a migration effect as well. And so that would be one of the things that I'd be paying attention to is like where is the retail footprint? And like, are we building in areas that are like not necessarily growing at the same rate population wise as the rest of the country? And like, as you continue to feel the effects of net kind of migration out, it wouldn't surprise me if like into the future you see customer traffic continue to slightly decrease, just based on where these locations are.
And look, you're not necessarily mad if you're decreasing customer traffic, especially if over time you're able to keep up your inventory turns. Potentially, you're even shrinking footprint, or your inventory holds for some of those. But I think one of it just does, it's a lurking question for me, because then what that means is that maybe my core consumer is visiting me less often. Could mean that
Hmm.
they're trading for something else. It could
Hmm.
mean that maybe those customers, we've talked about Walmart on a previous episode, right? Maybe that some of those customers are actually getting cannibalized by Walmart. And so
Hmm.
in a season of economic uncertainty, maybe we win in the short term, but strategically we're losing out in
Hmm.
the long term. And so I get worried about some of the fundamentals when I think about this as an operator. And I think like what I would have loved to have seen is some kind of uptick, not in the same measure in all of these areas. And so seeing that decrease is to me, they put it at the top of the negative points here in Yahoo Finance. I do think that that's relatively important here, and so I
It's
think
a
that's
valid
something.
concern. It's a valid
Mhm.
concern. Now, I want to ask you, I see the ticker on the right-hand side of your screen. Why is Dollar Tree down 9% on the day? Because
Yeah,
I would have expected, right, if Dollar General is reporting positive results, that you're going to see some of that bleed into Dollar Tree. Do you have any insight on that?
I do. So actually, I was reading a little bit about both of them, and in fact, let's dangerously click somewhere that we've never been before. But Dollar Tree is reporting earnings also around a similar time, like maybe today or tomorrow. And so yeah, 14 hours ago, Dollar Tree earnings. So like let's take a look at this information. So yeah, okay, actually, so this was a preview for Dollar Tree. So Dollar Tree is reporting earnings today. And I think some of the core concerns are that if you didn't open the same number of stores, which I don't believe that Dollar Tree did, which drove, like we saw, about half of the growth for Dollar General, and if customer traffic, like I was just talking about, has potentially been down, if you didn't do as good of a job of increasing basket size, you naturally have smaller basket sizes at Dollar Tree because the average price point per item is lower. I think that there are potential structural concerns about Dollar Tree. And in addition, Dollar Tree has made a much more firm commitment, although they've loosened it in the last couple of years, to a single price point. What was $1 now is $1.25. You're more likely to get constrained on the cost side if you have a commitment to a certain price. Than you are if you are more flexible in terms of your pricing, like a Dollar General is. So I think there's a sense that Dollar Tree has less pricing power, potentially a similar customer profile mix, lower growth, potentially because of same store openings. But yeah, I was reading it because there was a dovetail in the way that the earnings were happening. So it could be worth it to come back when we have the full detail on another episode.
Yeah, absolutely. Because the stock's getting absolutely hammered this morning. And so, okay, Dollar General's down a point, Dollar Tree's down 9. Like there's got to be an explanation for the delta. And so just wasn't sure if you had some insight there or not, but that's helpful.
Absolutely. So we've talked a little bit about some of the methodology for calculating the unemployment research. We've talked a lot about Dollar Tree and Dollar General today. And overall, I think Naman and I are contrarians, and we're contrarians in different ways with different perspective on it. But when we see headlines that say, the sky is falling and the house is burning, we look really, really basically at some of the core issues that are underlying it in the economy. I would really encourage y'all to develop a contrarian perspective. Sometimes consensus is right. I do want to say that. We have to acknowledge that that's the case. But when the times when you are wrong going against or wrong going against consensus, or right, maybe more appropriately said, going against consensus when consensus is the wrong direction to go, those are the times when you win big, right? That's the time when my accountant said, when I was buying my first company, there's no assets here, you should never buy it. And then I showed him the cash flows a few years later and he was like, dang, I was super wrong, right? When people have one perspective and you take a contrarian approach, I think that's where a lot of big opportunities come. And so it's important that y'all begin to develop the eagle eye for those kind of contrarian insights. We hope you've really enjoyed the episode today. Have a great rest of your Wednesday, and we'll see you tomorrow. Same time, same channel.